Hi guys, TT here. This is video number 2 and I would like to cover today how can you use your weekly trigger trades uh, in a different way apart from the traditional way that we do every week. How can you use it for earnings announcement in some stocks? In this case, I included for the past week, I included Baidu, which is not a stock that I normally play because they were announcing earnings on last Tuesday. So um, this is Friday before last week, and you can see here in the corner that I already plotted the levels indicated before. Yeah. So let's see what happened. Yeah. Okay, that's Monday and Tuesday. Okay, so um, if you want to play this for earnings, you can straddle this stock having calls and puts. Yeah. So in that way, you can hold it and you really don't care too much about direction. What you want is a big movement. So calls or puts will be compensating each other. Then let's see what happened. Well, on Monday, actually after 15 minutes, the you already have the trigger cross, which is very nice. Yeah, you didn't have to wait too much, and actually you can have a second thought. Okay, should I use a standard trade and then have a straddle? Um, there are many options because at the end the earnings was on Tuesday, so Monday you could decide to play only directional in the traditional way or starting to with your straddle from the very beginning, whatever. But the important part is that you already have a crossing in your trigger line. Let's put this a bit thinner, and you have another touch point here, and I want to highlight this and I to highlight this. So let's make some comments here. So when you cross the trigger line with a strong candle, you may be hesitant to jump at that moment, yeah? Although you should be jumping really here, you may be hesitant because you say, well, maybe this is going to be a week or whatever. For whatever reason, let's keep conservative and say that you didn't take the trade in this candle. In this second candle, you are a bit hesitant because it's a doji, but it's still above the trigger line. In this trade, you are, well, maybe this is a pullback, but definitely in this trade that we are crossing and where we are holding basically the trigger line, you are into the trade. It quickly went to your level number 1. And again, you have 3 opportunities for taking profits. Let's say that you missed the first one because it was only a tagging, but you have a second and a third opportunity where even the prices were beyond the level number 1. So there is no reason for not you having a good profit there. Then prices pull back, and this action I already marked it because it's very interesting. Yeah, I already said that the trigger levels are actually the most important levels in the whole system because they try to contain all the action price that is oscillating, where the prices are moving up and down and you really don't know. After the trigger lines, normally you will have a trend and many times a strong movement. So this is where you want to be. So when you see that the prices go to and tag the trigger line in the traditional way of resistance and support, and then the prices hold that line. This is a bullish sign in this case, and you should have been into the trade again at some moment, and then you will have a, let's say, a second profit. And the other areas I market here is because I have mentioned several times that the every level then acts as a trigger for the next level. So this was again a bullish action, and this another bullish action. So you have several opportunities for taking directional trades on Monday in the traditional way of the weekly trigger trades. That is clear, I hope. But remember that your end game with this trade was to capture the big movement that you possibly may have in an earnings announcement. So whatever you did on Monday, the idea is that you have calls and puts in Tuesday. And what we see is the prices crosses back the trigger line, but then go inside, again, a bullish sign, and then, prices went to the third level and even the fourth level, yeah? So you have plenty of opportunities to take in your price, and in this case, you are looking also, if you are having your puts, you are looking also how they are losing value, but still you should have some, and you could close the straddle if you have it for a nice profit. Yeah, during the day, again, you have several opportunities. Yeah, you are looking your price, looking the price behavior in the key levels, and this is a bullish action. Here you are looking for also a bullish action, but didn't happen, went through, so you do nothing. And here is oscillating, going back, so it's not holding. Here is holding, here is holding 4 times, 5 times in this 5-minute candle. So for half an hour, it was holding this line. So this is a bullish action. And let's see what happened the rest of the week. As they say, it's history. Yeah, it never came back, and you could have played these trades again and again now in a directional way, because it was only a bullish action, and you have more opportunities. Let me put it here. Put it here for you. Here you have here you have it. Here you have another. You even can consider this. But really what happened next is a matter of your personal trading style, sorry. And what I wanted to highlight is that with this movement that it went to level 4, you could have a nice profit, and another way to use these weekly trigger trades. I hope that this gives you other ideas in how to improve your trading, and please like it, subscribe it, do all the nice stuff, and I will see you in the next video. So thank you very much. See you soon.